Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of BTC, taking a look at what has been going on most recently with the price action, what I think is likely to happen next and all that wonderful stuff. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with all the video content that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. I don't think you'll be disappointed. It is the first place that we go to notify everybody of the ins and the outs of everything that's going on in the crypto space, so keep a finger on the pulse of crypto by joining us in Discord. Okay, let's jump down into the desktop, take a look at Bitcoin, take a look at some data. This might be a slightly longer video. There's lots to talk about, lots of things to kind of get our heads around in terms of what is going on. So if I get time, I'll timestamp it. If not, maybe someone else can, if they have time, add timestamps into the kind of comment section or whatever. Let's get into it. So first off the bat, I want to say I was sorry because I made a mistake. I was wrong. We actually broke out of our parallel channel here rather than having that break to the downside. And this is pretty much driven from the DXY. We couldn't keep talking about it. There's not really a lot of demand pushing the price to the upside. It is pretty much just because the DXY is going down that we're seeing Bitcoin go up. So understand that, from where is this up here on the 28th of September, the DXY has been decreasing quite a bit. If we come over into Bitcoin here, you can kind of see from November time over here, what's going on. I mean, obviously they had the FTX kind of saga. If we go further back, you can kind of see in September we saw this kind of push to the upside. FTX dragged us down, but we are still kind of continuing to the upside as the DXY is going down. So I'm going to remove this parallel channel here. Remove that, and we're going to take a fresh look on this daily chart. Is there a reason, is there cause to be bullish in here or not? And ultimately, what are these structures telling us? So let's start there, and then we're going to jump onto some on-chain metrics as well, see what's going on from the on-chain stuff as well as what's going on from the price action right in here. So straight off the bat, I know that some people will be wanting to kind of think of this area down here as some kind of 1, 2, 3, 4, 5 leading diagonal. It does not meet the requirements of a leading diagonal, so it's not that. You have to have a 1.618 wave 3 position. That doesn't change. Leading diagonals, you can have overlap within your wave 1 and wave 4s, but typically speaking, this does not meet the requirements for a leading diagonal. So this is all corrective to the upside here. We also have this move to the downside, and this actually looks like 5 waves to the downside coming in here, and something that does meet the requirements. I'm just going to draw this wick just slightly to the left so you can kind of see 1, 2, 3, 4, and 5. Now, the interesting part about that is there's a couple of different ways of looking at it. And if we start thinking about this correction coming here, up here, and maybe here, this would be what would be a running flat correction right in this particular area. And that would allow us then to take a look at the 3 waves down. Look at this as 3 waves coming up and then 5 waves coming down. So unlike the irregular flat where we would come down lower than the A wave, it was basically looking like a running flat correction. So all of this does look corrective. And obviously by the time we get to here, we then have this move upwards, which is also really, really interesting. There isn't really much of a wave count to be done on the daily between the low down here at 15.5 to the 18,200 level. It's kind of just like one candlestick essentially on the daily chart. Now, what's more interesting is this real good kind of, run to the upside. Now, this, I think we can kind of start to reflect on maybe being a little bit more in line with a kind of a 5-wave structure, meaning that we haven't had a wave 4 or wave 5 just yet. Now, if we go ahead, and I know what people kind of really want to do is they want to draw a 5-wave structure like this and see that we're almost at that 1.618. That will come in right up here at 21,503, and we're not there yet, right? So we can't sit back and think we're in a 5-wave trend structure from the bottom here. One, we haven't got the correct count, and one, we haven't, and two, we haven't hit the 1.618. So we know that's not really what's going on. But we can, of course, articulate one in here because it's really, really parabolic, right? We have that kind of move, and we can potentially see that. Now, if we do this, and we do go up higher than 21,500, then, like I said before, this does not look like a 5-wave structure, okay? Because it's not a leading diagonal as far as I'm concerned. We don't have those requirements, right? But some people in the space will want to kind of do this, and we can just do some sense checks just to make sure. I mean, doesn't look like it to me, but we need to do a sense check anyway. Yeah, so we don't hit the 1.618 until we get up here. Okay, so you could either then articulate this entire thing as a diagonal with an overextended 5, that would be possible, but you wouldn't really expect to see an ending diagonal with that overextension in 5 in the wave 5 position. It would just be unusual, and although I can't think of any rules that would prevent that, I don't think it was something that you would typically ever see. So yeah, it's one of those. Plus, when it comes to ending diagonals, you're always looking for 3-wave structures, not 5-wave structures, as in you should have 3-3, 3-3-3, kind of like 5-3 structures. So, until that happens, you can't really argue that that is a leading diagonal. So if anything, it looks like we probably have our corrective structure in here. And actually, in reality, what we've probably gone and done is we've come up here into wave 1. We then kind of have our flat correction in here, right? Which we would probably take the extreme lows, and then we come up here into this final 5. And this again would look like in a regular flat correction ending in 5 waves potentially. And that would be a real interesting one with the running flat and adjacent to or actually coupled inside that B wave movement, being the running flat, with then the actual irregular flat being the corrective structure in total. It's going to be interesting to kind of see how it kind of goes. So when it comes to Elliott wave theory, that's a lot to kind of digest. These are not simplistic wave counts, and these are ones that you typically find easy to miss, because you have to have a bit of a good understanding on the actual internal workings of those particular structures. Now, if I remove all of that, and the obvious thing that most retail investors will probably be looking at will be a potential for cup and handle. We're talking about this before, but you can look at it like this, and of course, we'll have to be looking for maybe some kind of handle, and then of course you have that cup and handle potential on this daily chart. These are the obvious kind of patterns that most retail investors would be looking at, but again, I don't think they generally have too much of a success rate in themselves. Now, we haven't peaked up above this high being 21,467. Ultimately, looking at the corrective structure, even if we want to kind of just look at it like this, without kind of worrying too much about what's going on that side, it doesn't look like there's anything unusual here. Like I said, we are not at the 1.618. If I pull this over to here, we can see that we just peaking above the 1.382, which is unusual for wave C, to be fair, but we can see the sub count being 5 waves, so we know what that is. We do have, of course, as well, just up here, let me grab hold of a circle. This area, this is of course the 200 EMA on the daily chart, and it does look like the 200 EMA is rejecting the price action. So whether you like Elliott wave theory, whether you like trend lines, resistance lines, whatever, the 200 EMA is a key area for Bitcoin. It's a key area for most stocks and Forex trading as well. 200 EMA is basically your trend filter. The higher the macro time frame that you're on, the more important that is. Obviously, we're below the weekly. You can see it right up there, and obviously we are below the daily at the moment, and it looks like we're trying to test it. Now, if we come all the way back to when we were at 48k, we broke this area but unable to keep it under the retest. Okay, so even if we break this 200 EMA, it's all about the retesting and confirming that the 200 EMA is going to be a support level. I don't think that will be the case. Now, let's hypothetically say all rules on Elliott wave theory are kind of parked and put to bed, and we're just going to go and draw ahead of a 5-wave structure on here. We're going to go 1, 2, and this is going to hit 3, 4, and then 5. Well, the expectation would be a wave 2. Wave 2s typically retrace 50 to 88.2%. Basically, this would indicate to us, if I draw it on this way, no, other way around. If I draw it on from the bottom here, and hypothetically say we go up to this kind of higher range around this kind of resistance line, then, we would be talking about coming down towards $16,000 again on Bitcoin, and it would still be a bullish structure, because this would potentially just be your 5-wave, wave 1 kind of scenario. If I zoom out far enough here on the daily chart, right, if we want to be like real bullish about it, and, we're not emotional and we're just going to be like trading with the data, then actually the retracement is kind of where we want to get, right? We have the confirmation of the trend to the upside. We retrace anywhere between 18 and 16k, and then we get the the real big runs to the upside, right? So often what we can try to find in terms of anyone who's done the Elliott wave theory course, and I'm talking about these 5 wave structures, you'll know that I often talk about wave 1 being kind of like considered a fake pump. People don't believe that it's the reversal in the market and it's a trend, and that basically everyone's really happy that the price comes down into the wave 2. The wave 2 is where the institutional buyers and whales are buying, and then they rally this thing up into the wave 3. Most retail investors miss the wave 3. They look to buy the dip on the wave 4, and then they take it up into the wave 5. Meanwhile, all the whales were selling on the wave 3. Now, on the time scale of this thing, this is being our daily chart, all of that would then potentially be wrapped up just as, you bet it, just a wave 1 or a wave A. I'll draw it up as a wave 1 here. So wave 1 would come down, then come back up again, and so forth, right? So we end up with these kind of structures that lead us out of the bear market. But where we are right now is in the real early stages of it. None of it is confirmed, and it's just kind of wild speculation to even think that we're in a bull market when we haven't even crossed the 200 EMA or completed even the first 5-wave impulsive structure. So lots of things to kind of think about there. I don't think we're in a bullish time just yet. Like I said, I think this is actually potentially an irregular flat with that running flat in the middle of the B wave, and we're going to come on down a little bit further. Now, all of that on the daily chart is really interesting. If I come up into our weekly time frame and throw on, let me just check the settings on that. That's the 100. So this one must be the 50, which it is. If I bring this one on here, you can see on this weekly time frame the 50 and the 200 EMA. When these two things cross, this would be considered death cross, and they are getting real close. Right now, we've got a little bit of a curvature here on the 50 EMA. So brace yourself, because that will be considered the bad news that will be all over the social medias, kind of telling you, you know, death cross, cryptocurrency is going to drop, etc., etc. Really, that's where you kind of want to be buying that kind of pain. Now, really important that we kind of, reflect on that from time to time. The DXY dropping down has a very similar setup, as you can kind of see here on the daily chart. We've got the 50 EMA looking to cross the 100 EMA. Again, death cross on the DXY could spur on a bit of a movement to the upside when it comes to these cryptocurrency assets. It doesn't, of course, necessarily mean that there isn't a good dollar cost averaging opportunity further down the line. You kind of have to kind of sit back, be patient, wait, and see how these kind of things play out. But there's always a pullback, and if we are going in a trend to the upside, then that pullback is going to be 50% at least on that next structure upwards afterwards. So we go up, we pull back 50%. And then, we have the confirmation of the trend to the upside if we want. Now, if I bring up the Bitcoin kind of chart here, you can kind of see the cup and handle that didn't play out. That was the one we were talking about previously. You can see right up here, if I find it, and we want the weekly, there it is. This is the cross that we're talking about, the 50 and the 200 EMA, you can kind of see in there. Now, this particular chart also shows us that we've broken back through the previous area of demand that we were seeing as a brief area of supply. Coming back through here, and a retest of this area is going to be absolutely key. This area is 19,798 through to about actually, no, it's not. It's 17,607 to 18,814, if I can read the correct labels. So you can see coming back down here would either confirm this as support or fail to confirm it as support and break back through it, turning it back into the resistance. So just kind of keep that in mind. This is the area of the previous all-time high. This is the area that we were consolidating on for such a long time, and then finally broke on through it with FTX's help. So just kind of keep that in mind, that these things are still in play. There's nothing here to get terribly too excited about. Now, if we go ahead and start drawing trend lines on, because, retail investors seem to love a trend line, and we'll start to pull these things on here as well, we can see that we haven't even come anywhere close to retesting the trend line here for the price action of BTC. Not only have we not retested the trend line, we also are below the 200 EMA. We're below the 50 EMA. On the weekly time frame, it's not looking overly great. Now, if I come up here and bring the stochastic RSI into play, we can, of course, represent this stochastic RSI moving rapidly to the upside. This is not a good sign for the price action of BTC for a slightly longer term. Now, this is quite problematic, because when you have a fast-moving stochastic RSI, it just shows you that there's lack of momentum in that upward direction here. So we want to be a little bit cautious. Last time that we were in the oversold to overbought area, we didn't really terribly do too much. We kind of did this little bounce here. We retested the 200 EMA and got rejected from it. You can see it right there, as clear as day. Okay, and the fact that we are still below the 200 EMA and we haven't tested it, and we're approaching that upper area of the stochastic RSI on the weekly time frame, this is not potentially not gearing up for a great move. You can see here that not only does the 200, 50 and the trend line coincide together with the current week where we are, we should be expecting kind of major resistances around these previous highs that we had as well, around the $24,000. So outside of Elliott Wave theory and just looking at some basic technical indicators here, such as the stochastic RSI, the 200 EMA, the 50 EMA, and a real simplistic trend line, we can see that there's going to be major problems just a little bit higher in the price chart. Which means we have options as to whether or not we want to be holding our positions or wanting to kind of think about coming out of these and waiting for their next kind of low to kind of come on in so that we can accumulate, right? I don't want to be bearish. I want to see a bull run. I'm just not confident that this data here actually supports us in a bullish market. Instead, I think we're actually coming up against major resistances. Now, there are a few areas on here that are probably worth noting. I'll draw on this one here to start with. This comes in at 21,800 to 22,800. And then, of course, we have this upper area right in here as well. And this one is the $24,000 to $25,000 range. And both of these areas, you can see, are going to be major areas of resistance for us, loads of selling pressure. At the moment, we're sat right in this one, right in here. You can kind of see it working out incredibly well with the previous highs, also finding it a lot of selling pressure right in there as well. You've got to bear in mind that people who were buying here because they thought that they were going to the moon got trapped in their positions, and now they've revisited this area, they can come out cost neutral. Do you think that they're going to be holding on thinking that they're going to the moon, or do you think actually they're going to come out of their positions? Likewise up here, when they might see a slight bit of green, up here they might see a little bit of green. All of the resistances in these lines are going to be problematic for the price action of Bitcoin. You've got to bear in mind that we haven't seen terribly huge demand coming in here. All we have seen is a DXY climbing up a little bit higher. Okay, so bearing in mind these things, it puts us in a bearish state of mind, not a bullish state of mind, and all that kind of stuff. Now, whilst we're here, we're going to come down into our daily time frame. I think that's going to be a good place to go to. Actually, we'll do it on this one, daily time frame here. And what I'll do is bring up, not the stochastics, I'm going to bring up the RSI, okay? And we're going to talk about the RSI here. Now, the RSI is giving us a pretty interesting indication. Okay, we can see that the RSI at the moment is up here in the overbought area, and we can see if we draw a trend line on here all the way from the all-time high, okay, the RSI was lower than it is now. Okay, so the RSI is higher now with a lower high in price action. This is bearish divergence. We can't ignore it. It simply is what it is. And I know there's going to be some people that are saying this is exactly the same setup as 2018 into 2019. I disagree. It's not the same setup. It's a very, very different setup. And for that, I will, of course, come back. Actually, you know what I'll do? I will come in here, and because this is going to be a slightly longer video anyway, I'll break this down so that we can be, you know, kind of, you know, optimistic when we should be, and pessimistic otherwise. Now, the first thing that we need to do is obviously analyze where we were when we had that low in 2018 in that rally, right? So this is what people, or some people, are trying to kind of liken us to. They think that this is what's occurring. And I still obviously will say that although there was a COVID crash here, this is our wave 2 scenario, right? Where we have this massive pullback. You still come into the deeper traces and retraces and better accumulation zones. Even if you're FOMOing in a little bit on the later side, you will also see that pullback. Now, the differences here are very, very basic, but they are really important that we understand, because different variables mean different outcomes. You can't expect something to have changed but still have the same outcome. Okay, and the main thing here is that we stayed above the 1.236 right up here in the actual bear market low point. Okay, now that's important. It might not sound like it's important, but it is really important. Now, when we come over into the 2014 lows, we can also see that we bounced from the 1.236. Okay, the 1.236 fib level is kind of the way you would expect the maximum level of a C wave to go. Like anything above and beyond that, it wouldn't really fall within the C wave structure. It's more like a Y wave structure. Okay, now if we come over to this bear market in 2022, well, fuck me, we've gone down lower than the 1.236. We've gone down lower than the 1.382. We're on our way towards the 1.618. Now, that is a massive, massive different variable that was not around in the previous low cycles. Now, we can go above and beyond these things, okay, by taking a look at the whale counts and the shrimp counts, or the retail counts of wallets that were happening during the 2018 low points, right? If we're expecting the same scenario, then we're going to have to expect players to be behaving in the same way, right? Which we obviously know is different because of the Fibonacci numbers, right? So Fibonacci sequencing is really important when it comes to price action and how people are emotionally triggered, right? So we want to understand that if we are to assume the same kind of output here and we're going to rally on up into this bull market, then of course we'll be looking for the same kind of setups, right? Not looking for loads of stacking up of different variables. So when we take a look at what the retail investors were doing back down here in the lows of 2018, well, what do we see? Well, we can see that they were actually selling off their assets into the actual low point because, again, they believed that Bitcoin wasn't going anywhere. It was a scam. It was going to zero. All the kind of usual stuff that you hear when markets are correcting down. Okay, and basically you can see here that they were selling. Now, why is that important? Because there's always someone buying on the other end of that, right? If someone is selling, someone's got to be buying. And here you have the whales, and the whales were buying at that particular moment in time, right? Before the bottom was actually in, the whales have to buy the Bitcoin from the people who are selling, okay, and dragging the market down into those low points, right? So it's important that we understand that the larger whale investors, these are your institutional players, right? And these are billionaires and multimillionaires who navigate these spaces impeccably well time and time again. And of course, you've got retail investors who do not navigate the markets well, and they prove this time and time again, right? We can see that they buy up every single dip known to man on the way down, okay, and then they sell into the actual bottom, okay, and this is because they were told this is the bottom, they were told this was the bottom, and then they were told this was the bottom, okay. And in reality is that there's always going to be a buyer and there's always going to be a seller, and the retail investors will sell their Bitcoin to the whale investor, the billionaires, the multimillionaires, on the cheap. Okay, that is unfortunately a reality of the situation. Now, when we start taking stock of the current situation, what do we see? Well, we see retail investors are not selling yet. Okay, so if the retail investors are not selling, then there's no massive amount of Bitcoin for the whale investors to be buying. Okay, and the whale investors, well, they haven't been buying. In fact, most recently, they've been selling into the pump to the upside, which means they continue to de-risk and come out of their positions of Bitcoin, selling the Bitcoin at a premium to the retail investors. Now, we have to ask ourselves this. Do you think that the retail investor is right and that the bottom is in, we're going to the moon, and the whale investor's got it all wrong, and the whale investor is basically going to have to buy it back more expensive? Name a point in history where that is something that we have seen. We haven't. So when we come back into the charts and we're thinking, okay, we're expecting the same results, well, we haven't got the same setup. The setup is vastly different. If you're looking at a few candles and saying, look, the candles are exactly the same, sure, but you're missing the bigger picture, which is there's a buyer and a seller, and they are not marrying up, telling us that we're in a bull market. Not only that, we are in totally different Fibonacci sequencing, and we have to bear in mind we've done things in this particular bear market that haven't been done before in Bitcoin's history. So we can't just rely on the same kind of indicators that are kind of telling us that the bottom is in time and time again when they fail on us time and time again. We have completely different set of variables, and we need to consider those variables before we make any kind of big financial decisions. And for me, I would rather have confirmation of a trend to the upside and then buy the retracement on that than kind of just hoping that this is not a falling knife and, you know, I've bought the bottom, right? Because very few people actually ever do. Most people, in fact, will dollar cost average slowly over time, and that's a fantastic strategy to have. Just be really, really cautious. There's a lot of bear signals being flagged up here, right? We've got the RSI with the bearish divergence. We've got Fibonacci numbers that are way, way deeper than we would ever normally expect from basic corrective structures. And the next pull to the downside is going to be absolutely brutal for many retail investors who continuously FOMO in. I think we're going to see a mass sell-off event when it comes to retail investors. They are potentially going to be forced into selling because they need their funds. And I think this is going to be a dragged out bear market, much longer than anything else we have seen so far. Not expecting a bear market bottom for several months just yet, and until those retail investors are selling their assets over to the larger institutional investors, I don't really have too much hope for the money that is going to be required to push Bitcoin into these highs that everyone seems to be so giddy about at the moment. So yeah, there's a lot to think about. There's a lot of consideration to be made when it comes to the price action of BTC, whether you're bullish or bearish, and let me know what your thoughts are in the comments down below. Do you think that, the 200 EMA doesn't mean anything? Do you think that going down lower than a 1.382 fib level also means nothing? And do you think that actually just taking a copy of some candles from the last bullish cycle, overlaying them over the top, actually does mean something? Maybe you don't believe that whales are selling. Maybe you believe that whales have taken their 10,000 Bitcoin bag and divided that up into, little tiny wallets, and they're managing multiple different wallets, right? And they're using that to kind of mask their efforts. Let me know in the comments below. I'm interested to know your thoughts and opinions on it all. But I've kind of laid the cards out here. This is what I think, and I might be wrong. I might be right. Yeah, it is what it is. And like I said before, the only thing that really matters here is that you have a plan for whatever scenario unfolds. If we go up in a trend and we confirm trend, fantastic. We'll dollar cost average on the way down on the next dip, and we're good to go. If we, of course, don't confirm trend, well, we've got lower lows to come. We'll dollar cost average as we go. Until the next one, guys, have a fantastic day.